In Investing 101 today, how the pros invest during an election week. Right now, many people are concerned about the stock market, but fear not. We have Sam Stovall, the Chief Investment Strategist at CFRA Research with us now. And Sam, what is your post-election stock market forecast?
Well, Angie, I think that once the uncertainty is over, then what we find is that the market continues to go on its bullish trajectory. We recovered all that we lost in the prior bear market on August 18th. History then says we go through a digestion of those gains, which we did, but then none of the observations since World War II had us fall into a new bear market after immediately recovering what we lost in the prior bear market. So on average, we have 36 months or 3 years of bull market ahead of us. So now the question is, where do investors want to go? We've started seeing some rotation into small caps, into value, and into international stocks. And the real question is whether they have staying power. And it's a little too early to say just yet.
Well, Sam, as you know, the small caps and the Russell have outperformed here and there compared to the S&P 500 at times. But is that enough of a glimmer of hope?
Well, it's getting people's attention, but as the old saying goes, fool me once, shame on you, fool me 12 times, shame on me. I say it that way because there have been multiple times in the near past where small caps have started to outperform only to fizzle out. Ditto for value stocks over growth stocks. So I think the real question is, if investors believe that there will be a stimulus package that quickly emerges as a result of the conclusion of the election, whether there is infrastructure spending, et cetera, then I think that would be beneficial to small cap companies. Also, if we find that the economy starts to open up fairly quickly and that we do get a vaccine to be arriving soon, all of those factors I think will help to support and continue the rally in the small cap space.
How are you allocated as far as cash versus stocks versus bonds in the market?
Well, our traditional allocation is 60-40, with about 30% of that 40 in bonds. So a lot of our subscribers to our flagship newsletter are more mature investors. So right now we have about a 10% exposure to cash. So the feeling is we have been bouncing off of this recent decline. In the last full week of October, the S&P 500 was down 5.6%. So right now we're bouncing off of that oversold level. But the question is whether this rally itself has steam. We think that it might, but November is traditionally a pretty shaky month. Historically, whenever the Democrats have won the election, November, you see a price decline for the S&P 500, which is even deeper if it's a Democratic trifecta. But, all hope is not lost, because whether you have a Democratic or a Republican president, December is positive more than 85% of the time. And we end up seeing a pretty strong advance as investors look toward the new calendar year and get taken up by the seasonal optimism.
Sam, it was wonderful to have you here, and we hope to have you back.
My pleasure. Look forward to it.
Check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.